as you can see right there, February 1st, 2009, that was during the lowest of the market crash in 2008. That of course extended to 2009. You can see this fund DGS.TO went down all the way to 280, but that wasn't the lowest point it did break into within that time. So if you look again, it went back up to 989, and then there was a little market crash right there, November 1st, 2011, and then it did crash again in 2016, and it went up, and then in 2018 there was a little bit market crash again. It went to 360, retested bottom, and then the last time it retested bottom before this time was in 2020. That was it during market crash during COVID. That was the lowest point. It went all the way to, it went down to $2.62, and it went back up again to 738, and then it never retested the bottom until right now is coming to where it closes today at 395. That was the lowest it went within this period. So when you look at that chart, it tells you, well, there's a lot of volatility for this this stock, but it hasn't gone the lowest it has, as we've seen on the other split fund like a DFN. When we look at dividend yield right now is over 30%, because they also pay 120 annually, which is equal to 10 cents per share per month technically. But right now, of course, we'll see a dividend history of this fund, because we're trying to compare if DGS is better for you to invest rather than DFN, which is a fund that I've made a couple videos, or a few videos actually, about it. That was a dividend 15 split corp, and this one is dividend growth split corp. This is Brampton. The other one is Harvest. They're all Canadian companies, the mutual fund Canadian companies, but of course they have different providers. We look at the 52-week range is 385 to 669, almost $7. So volume, it has a bigger volume, of course, 100,000 today. Ex dividend date, it says here April 27, 2023. That was the last time they paid. So we're going to look at the fund itself. Here, I just want to give you a little bit of these few things here. We're going to look at overview, portfolio performance, and distribution, because these three things, these four things here, will actually give you a clear picture of this fund, which is DGS, if it's the right fund for you to invest your money. If it's your first time on this channel, please, this is the Mr. Management channel. On this channel, I talk about investing in anything related to your finance, and I talk a lot about passive income investing and also growth investing. I made a video on individual stocks as well. So if it's your first time, just make sure to subscribe. And if you find this video and any of my videos actually have an impact or have any teach you something, just please give me a like. So let's go here. We can start an overview quick. Dividend, the name itself is Dividend Growth Split Corp, with DGS, Class A share, and there's also Class Preferred share, because it is split, meaning there are two type of shares, right? They usually same as Dividend 15 Split Corp, which is provided by Quadravest, but this one is Brampton Fund. We look at the closing price right now is 3.95. We look at the NAV is 450. So here's the one thing I'm going to I will let you know about this. I do a lot of NAV to compare the actual value of the stock as of today versus the NAV, because this is something that will kind of give you a hint of why you're buying. Is it value? Is it overvalue? Right? That's the only way we can tell for funds, right? For stocks, we look at when it comes to stock, we look at the earnings and PE ratio and all that stuff like that. There are a lot of metrics you can look at stocks, and you can determine if a stock is worth what you're buying or is overvalued. But when it comes to fund, these are the only thing we look at: NAV versus price, and we can see, and also dividends in a way. We look at management fee right now is 0.6 basis point, and unit NAV altogether between the preferred share and Class A share is about 1458. Total asset right now is 685 million. So it's a little bit less than DFN, because these are the biggest one of the split funds in Canada. So we look at the why invest in this particular fund, right? So its first is a large cap portfolio, primarily Canadian equity with higher dividend growth rates and high current yield. Dividend growth reflects company ability to grow earnings and strong underlying business fundamental. Dividend growth companies have historically outperformed the broader index, and we're going to look if that's true with this particular fund. If has outperformed the broader index, you'll be surprised. Attractive distribution in class A and preferred share. So whether you can go with class A or preferred share, both of them they have dividends and potential for capital appreciation for class A shares due to leverage exposure to dividend growth portfolio. So of course, a class A share pays more dividend than a class preferred share, but then in return, your stock here, class A share, is more volatile. So for most people who are watching this video, we are going mainly with class A share. I don't like to talk preferred share because preferred share, first of all, they pay lower dividends, and they really they are at this point, especially now with the high interest rate, you might as well just buy treasury, like the bonds. So I wouldn't buy preferred share. I would rather just buy bond because the yield is pretty much almost similar, because it pays like 4%. And with the class A, with the bond right now, you can get also 4%. So I mean 5%. So we're talking about class A share right now. Monthly distribution, primarily return of capital. And they do return of capital. The reason they do this is because of the taxation, right? Because if you get a return of capital, you don't pay tax on your dividends. That's the reason they do that. But if you want to know if you invest a lot of money for in taxable account, you have to talk to your accountant, because I'm not a tax professional, but that's what I know because I run a business as well. Opportunity for capital appreciation, shareholders option to redeem at end of term with no restrictions, right? We're going to look at that redemption during restriction. And here we look at the fund fact. It's ticker symbol is DGS.TO. If so you don't get confused, the TO will give you, and you have to know if you have to buy this one, you have to make sure the name dividend growth split appears, because there are always a different ticker symbol that are similar with other tickers, right? So as we say, we now look at the preferred. We look at maturity date, September 27, 2024. That's the date this fund will be terminated, which is next year in September, so about a year from now. But they always have extension, so after that date, and they're gonna have to reapply, and then that's regulations, and they're going to they're going to extend that for another 5 years. So hopefully, and if that doesn't happen, then that's what they say, there is a shareholder option to redeem at end of term with no restrictions. So you can actually just sell your shares and take the money, and at that time you're going to get the value of what class A, the NAV that I've showed you. They're going to split NAV. You're going to get $10 for preferred, and you're gonna get the rest of the money, which is $4.58 for a class A share. So if you buy at $3.95, let's say for example they're closing today, you are getting a $4.58, so it's more than what you're getting for your share. This is pretty good if they close, but usually they don't close this type of funds because there's a lot of money, which of course government doesn't want to shut this thing down. We'll look at the currency. Of course, it's Canadian hedged. Inception date was December 3rd, 2007. This has been around for a long time. And of course, manager or portfolio manager is a Brampton Fund Limited. Custodian of this is a CIBC Mellon Trust Company. CIBC is one of the biggest banks in Canada. But of course, Melanie Trust Company is part of the CIBC, but it's not exactly like a bank. It's a branch of the CIBC. And then eligibility for this fund, where can you buy this? You can actually use any type of account if you have RSP, TFSA, or RESP, or a registered non-registered account. So taxable account you can also use to buy this one. Special restrictions notice deadline is August 30th, 2024. That will be the day they're gonna send you the thing. Of course, the notice that this fund will be terminated in this date, and it will be they will notify you if it's going to be extended or not. So that will be next year. So a year, almost a year, or about 10 months from now. Of course, we have discussed this. Brampton is a manager of this portfolio. So Brampton has a lot of other funds. So we look at the portfolio construction, how they construct this portfolio. A dividend growth split COP summary of investment portfolios of September 30th, 2023. Total net asset value is over 6 million. So about 700 million. So it's a lot of money. It's not on a billion yet. We'll look at geographical location. There is Canada is 99.99.9 is Canada, and cash. So pretty much most of their stocks are Canadian stocks. We'll look at the sector allocation. We have financials 29%, 28%. We have 17 energy. We have 13 industrial. We have 18. We have a 12.8 in consumer discretionary. We have 9.7 investment fund. We have 6.7 consumer staples. 4.5 utilities. We have 3.2 is material. We have 2.8 in communication services. We have 0.8 real estate, and 0.2 that's cash. So they have real estate is very little, but the biggest industry they have is financials and energy and industrial and consumer discretionary. Financial self takes about 30% almost. When it comes to the stocks themselves, there are 25 stocks, and you can see Brampton Global Dividend Growth. That's a 9%. Is Imperial Oil, Canadian Natural Resources. This Brampton Global Dividend Growth is a fund that invests in a global dividend. So this is an ETF that they actually put inside this fund. And of course, that's what they say. There's because most of these dividends you're getting, they're foreign currency, and they actually hedge them, and they just put back to as Canadian dollars. We look at the Canadian Natural Resources, Tourmaline Oil Corp, Dollarama, Alimentation Couche-Tard, Restaurant Brand International, that's Warren Buffett company. We have Sun Life Financial, we have Canadian Pacific Kansas, we have Thomson Reuters, Royal Bank of Canada, Financial Corporation, Canadian Tire Corporation, Manulife Financial, Bank of Montreal, Western Connection, Toronto Dominion Bank, Hydro One, Intact Financial, Tech Resources Limited, Loblaws company. So for people who live in East, like Ontario and Quebec and stuff, Loblaws. Of course, everywhere in Canada, of course, Superstores is part of the Loblaws, and I think Metro as well. We look at the National Bank of Canada. We have Brookfield Infrastructure Partner, ARC Resources, and TELUS Corporation. So these are the companies that they invest in, and you can see the biggest hold is a fund that they invest in, which is a Brampton Global Dividend Growth. So that's portfolio construction, which is a pretty diversified in a lot of companies. So they diversify more when it comes. If you compare these to DFN, this is more diversified. We look at performance now. This is something you want to look, right? So since 2007 has returned about 212%. Of course that. If you invest in Bitcoin or something like that, you'd have get more than that. But when it comes to this one, of course, they pay you monthly dividend. A cumulative dividend 15 split Corp Class A. Dividend growth split Corp Class A has returned cumulative within 10 years about 9.8%. So within 5 years, has returned about 10.9. That's annually, and since inception, cumulatively, that's including the dividend that you invest, has returned about 80%. So that has beaten. So you'd have done way better investing in this fund than investing in a TSX, because Toronto Stock Exchange, or TSX, like these global TSX ETFs, has only returned about 6 to 7%. So you've beaten the index with this fund actually, but that's provided you've actually reinvest your dividends, right? We look at the annual year-by-year return. The year that has returned the biggest was in 2021. Did return about 92%. So if you time the market and let's say for example you bought it only in 2021, you would have gotten a lot of money, 92%. So you get almost double. We look at that because the reason why this one is because in 2020 we've seen it crash all the way to $2, and then it rebounds. Is that as I showed you on the graph, it rebounds. So that's when it went all the way almost double, because in 2020 it crashed to 20%. We look at the other year was bad was 2018. It went down to 41%. That was the best time if you have to buy. In 2022, it crashed about 13%. Or 2023 as well, it has crashed, but we don't have performance on that chart there. So that's performance of this fund. So it's returned good, even if it looks shady in the chart, but that's performance. We look at the distribution. Here's one thing I kind of don't like about this fund. This is one thing, seriously. Distribution, okay? So the last time they paid in 2023, they did pay 10 cents, right, as a return of capital. The last time they did pay was in April 2023. So since April, they haven't paid anything up to now. So there are a lot of months they haven't paid. We'll look at the 2022. If we look at the 2022, you can see they did pay all the way. They paid every time. But let's look back to 2021. They did pay again, right? But we'll look at the 2020 during that COVID crash. You can see in 2020 they didn't really pay. They only pay up to February, and then from there they paid January, they paid February, and then the whole year they didn't pay. One thing I don't really like this fund is because of their payment history. Their payment history, whenever they cut dividends, it tends to extend. As I've made other video on DFN, I compared. DFN actually cut their dividend, but the history of payment is pretty good. So that's the thing I wanna, I just kind of update you on this one. But last thing we're going to look is the value of this fund, right? Because I mentioned what's the value right now? Are you getting value or is it on premium? So again, I'm gonna do my little calculation here because we know right now the dividend is over 30%. But if we look at the NAV is 450, so we take 450 minus or divide by the price rate of today, which is 395, divided by 3.95, 1 equal to 13. If we do that times 100, so you see right now you're getting is on discount about a 13, almost 14% right now. But when the NAV was updated was on October 19, 2023. So it's been a few weeks since they last updated. So it might be reflected either up or down. So let's say give or take, you're getting almost about 10% on discount right now. And you're getting, if you buy today and then they reinstate those dividends, you're getting over 30%. So valuation is good, dividend is good, but they don't pay, and we don't know when they're going to reinstate the payment. And that's all for just wanna give you update and performance of DGS and whether you should buy this one or you should buy DFN. For me personally, I really like it DFN because of those reasons. But when it comes to the stocks that they invest under, this one has more broader and diversification. But the only reason I wouldn't buy this one is because of their dividend cut. It seemed to be extended versus DFN. That's all for today. If you like this content, just give me a like. And if you haven't subscribed, in order for you to stay in the loop as usual, make sure you subscribe. Till we meet again next video. Bye bye.